Okay, guys, now before we continue, I would like to tell you about Fastball. Fastball is the new financial platform that I've been using lately, and I just discovered that this is the best financial platform. Fastball offers you an economy calendar. Now, this economy calendar, you can access it by coming to this economy calendar tab, and the first thing you want to do is to change this time zone to be your preferred time zone. Now on your left here we have the time column. Now this time column shows you the exact time at which a specific event is going to be taking place. Following the time column we have the impact column. Now this impact column gives you an indication of how that economic event is going to be affecting the financial market. 1 star simply means that this is going to have less impact in the financial market, and 2 stars shows that this is going to be having medium impact in the financial market, and then 3 stars shows that it's going to be having high impact in the financial market. And it also offers the actual, the forecast, and the previous data values for these economic events. And this is not only helpful to fundamental traders, but it can also help you as a technical trader to know when to be active in the market and when to stay away from the market. Now, if you're interested in this amazing feature along with the best features that comes with Fastball platform, go ahead and click the link in the description and it's going to take you to this platform. Now, Fastball comes with an app that is compatible with your mobile device. Now, I'm going to leave the download link in the description box. Go ahead and click on the link and it will take you to this website. And in this website, all you gotta do is to choose your operating system, whether it's Android or iOS, and then it will download the app and you can start enjoying the features of Fastball. Okay guys, now without any further waste of time, let's talk about liquidity. Now liquidity are the points in the market where we know that the market is going to be drawn into this area, and we know that the market has to run out these areas and then it can take our direction. Okay, so it's very important to know the points of liquidity so that you can avoid being part of liquidity, so that you can avoid using these points as entries. So last week I did make a video where I was giving out a signal of what I think is going to happen in Nasdaq, and around that time Nasdaq was still acting on a liquidity point, and I did say that I think that Nasdaq is going to liquidate that order block and then continue pushing to the downside to tap into our main order block, which was a very significant order block. Now, before we go and talk about this Nasdaq position or any other chart that we're going to be focusing on, I want us to look at the models of liquidity. Now, for example, say we are in an upward trend like this. As we are retracing to tap into an order block that is going to be here, we should see some liquidity. Now this is an example, this is a very basic example of what we can expect on an upward trend, but in reality when the market is busy retracing, it's creating these lower highs and these lower lows, and then along that it's also generating liquidity. So liquidity are points that the market runs out first before it pushes to the upside. Now liquidity can come in the form of trend lines, it can also come in the form of equal highs or relatively equal highs. So let's say we have this upward structure like this, and then we have an order block that we have over here. We want to see a liquidity being generated before we tap into this order block and buying to the upside. So what we want to see is we want to see the market creating structure like this. As you can see here, we have trend line liquidity, and then at some point it can also create this kind of liquidity and then tap into our order block and then push to the upside. Now as you can see here, we can label some points as liquidity. As you can see, we have this trend line liquidity that we got over here, and we also have this relatively equal high liquidity that we have going on right here. Okay, so another thing is we can have an order block. Let's say we have a candle that is an order block around this area. This candle can also give us the idea that we are going to be buying from this level, but it can also be misleading because let's say for example we have two interest points. We have this order block and then we have another order block. So depending on how the market behaves when it is approaching this order block, we can be able to tell if the market is going to respect this order block or is it going to mitigate this order block and just run it over. So as you can see here, this first order block is going to be used as liquidity to induce many people into thinking that here we are going to be buying, and then they will be start taking selling opportunities to the upside, and then the market will move a bit into their direction and then eventually violate their stop losses and then tap into this significant order block and then push to the upside. So now I'm going to dive into real charts and I'm going to show you guys what I am talking about. So let's go into the 4-hour time frame of Nasdaq. Okay guys, now here we are on the Nasdaq chart. It's the 4-hour time frame of Nasdaq. As you can see here, we were breaking structure. We broke structure to the upside like this. We broke structure to the upside over here, and then the market started retracing to the downside. Now as you can see here, we have 2 points of interest, or points that people can consider to be points of interest, and we also have another point over here. So this is the order block that I did tell many people that we are going to be buying from this area, and I did mention that we are going to use this for this level over here to induce liquidity in the market. So as you can see, the market did have a bit of a reaction on this point over here, and then it came over and then it took people out. As you can see, this level over here was used as liquidity. So as you can see, now we are in that good entry and we are about to reach our take profit. So that's it. That is how you can spot liquidity in our trade. So as you can see, even here, before we took out this high over here, liquidity was generated first. As you can see, these are relatively equal highs. So these are relatively equal highs over here, and the market reacted on the liquidity point to the upside, and then it ran that point out, and then eventually tapping into our QML level, which is about around this which is around here, and then it pushed to the upside. So knowing liquidity is very important, guys. As you can see here, we had this points over here, this points over here, which were eventually run out, and then the market did weak to the downside, tapping into this breaker block over here and then push to the upside. So it's very important to know what we are talking about when we talk about liquidity, because if you don't know how to spot liquidity, then you are most likely going to be part of liquidity. So the market is going to manipulate your trades so that it can generate liquidity and push into the original direction. As you can see here, we have also these 2 points here taking part as a form of what? As a form of liquidity. So as you can see, this is liquidity and then a reaction on this order block and then a push to the upside.